Welcome to the February 6, 2023 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman, with your weekly fast-paced tour of the global financial markets. I'm also president of McGowanGroup Wealth Management, a team of 10, a team right here in Dallas that serves affluent families around the country. We're so glad you've tuned in. Be sure to subscribe for the weekly intelligence reports and hit the like button if you enjoy the broadcast. Today, this is great news coming from several fronts, and I'm going to walk you through it. An amazing rally so far in 2023. The markets will do whatever it takes to surprise the greatest number of investors, and this year is a surprise so far, so we're going to get to that. The housing market. Just how much have Dallas homes dropped in value over the past few months? Now, this data is the amazing run-up in home prices. Bidding wars over the summer. This is May, this is June, and housing peaked at about that point. The rate of change over the past year started to come down. But notice this. This is a decrease of 12%. Dallas was actually worse than the national figures in the November numbers. December likely continues that trend. So the housing market has turned dramatically with the high interest rates from the Fed tightening. Now the Fed did tighten to 4.75% on the short rates. And surprise, the equity markets were down 1%. By the time Powell finished his speech on Wednesday, the equity markets were up between 1 and 2%. So what about that rally year to date? I'm going to quantify it for you here in just a second, but let's cover the real story on inflation again. Inflation essentially disappeared in June, consistent with the housing market, by the way. And look at that, deflation, deflation. Add up the fourth quarter. The fourth quarter inflation rate, if you annualize it, comes in at a 1.2%. That's below the Fed target, but they use trailing 12 months. So they're stubbornly saying, oh, inflation's got to come down. It's got to come down year over year. Well, it will. Look at this. These begin to drop off on this chart. And what does that tell us? It tells us that the inflation is naturally going to plummet from here, and you may even see more deflation like December. Well, that's good news from the inflation standpoint. If you were worried about a recession, because we've heard two things, Fed tightening inflation, and they'll cause a recession. 517,000 net new jobs in the month of January. So if you're worried about a recession, that's not a recession, at least not yet. We'll cover some of that at the end. This is the Dow year to date, up 2.5%. But tech had this huge bounce back. Look at this. This is the NASDAQ 100, primarily the tech stocks, up nearly 16% for the year. Wow, it was down over 30% last year, so it made up about half of that in 1 month. Well, the January effect is when people stop tax loss selling and things tend to bounce back aggressively. Well, that may be over, and some of it was short covering. Miserable earnings this week from Facebook, Apple, Amazon, yet they rallied. That's likely short covering. Somebody had bet against the stock, they have to reverse it, essentially buy it, and it causes an artificial bounce. It happened in 2001, and then everything rolled over until October 8th of 2002. So be careful about going into the last exciting gain opportunity simply because it came down. Sometimes it takes longer than you expect. Now, here is the Dow 1 year. Why did I put this in? It's a minus 1% on a 1 year basis. So the bounce back has said, well, we're still at about 34,000 on the Dow. We hit that level back in April of 2021. So that's nearly 2 years at about the same level. That's also a type of correction. Now here, we keep hearing recession. But the question is, what type of recession? How bad is it? Is it just slowing growth? Well, we were expecting the fourth quarter, according to the learned Bloomberg economists, it was supposed to be just 0.4%. That's anemic growth, stall speed on the verge of a recession. It came in at 2.9, but inflation annualized at 1.25. That's a great environment. Companies can figure out how to make more money in that environment. Through the 23 forecast, you get 2 negative quarters. Be afraid, be very afraid, because that is normally associated with a huge contraction like 2008 when they say recession. No, this minus 0.6, minus 0.2 after inflation projected for the second quarter and the third quarter, the middle of the year. Actually, that's like you probably wouldn't even notice it. It's just you stall for a little bit and then growth picks up afterwards. So we want to get positioned knowing that inflation has subsided, especially the last 3 months. It's likely to come down naturally because the big numbers were at the Ukraine invasion. So cautious optimism going forward, and we still love the energy complex. And the global high yield bonds have had a huge rally so far this year with a great yield. I'm Spencer McGowan, President, McGowanGroup Asset Management. Set your time for a brainstorming session by Zoom or in the office with McGowanGroup Wealth Management. Thank you for tuning in to Net Worth Media today. And our efforts over the past 2 decades to educate clients and help clients make great decisions, that's the reason that we're here at YouTube McGowan Group, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowanGroup Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowanGroup Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.